That. So, it's been a very slow month for passenger car sales because, we are seeing roughly about a 15 to 30% fall in this particular month compared to the same time last year, as well as on a month-on-month basis as well. So just a caveat that, the Diwali month was in the first week of November. So, the month-on-month sales were expected to be lower, but on a year-on-year basis also, the numbers have been quite poor. So as you can see on your screen, almost down 15 to 41% across the players, but Mahindra and Mahindra has reported the lowest degrowth or the lowest fall amongst all these players as well. That's been one of the key things to watch out for. The other key aspect that this data throws up, and there's a reason we've included the Toyota numbers as well, because there's a lot of cannibalization between Maruti as well as Toyota numbers because of the rebadged cars. So, you will have the same model, but with a different number and just the rebadged Toyota as well. We see that, Maruti shares cars like the Fronx as well as the High Rider, as well as, some other variants as well. Now, the number that's very interesting is that 36% of all Maruti cars, or what Toyota sells, is rebadged Maruti cars effectively. So you see a very slow, on a year-on-year basis, Toyota has actually outperformed all the other listed players with just showing a 3% fall versus someone like a Maruti that's reported a 27% fall in sales in this particular month. That's one of the key things to watch out for. The other aspect is that it puts a lot of pressure on the next 3 months, which is the Q4 of this fiscal year, to show growth, because if you look at the 9 months data, it's just been roughly about 2 to 3% growth for Maruti. For Tata Motors, it's actually been a 1% fall in sales in the 9 months. So any kind of growth expectations for FY25 is penciled in the last quarter, and we are expecting a strong month of January because the company had announced price hikes. But January and February are very big months for the auto cars makers. So watch out for these stocks in trade today. We have seen all passenger car makers be under pressure, while the two-wheeler makers have been, making inroads at a slower growth rate compared to the first half, but it's still very positive as well. So, the valuations for most of these companies, Maruti as well as Hyundai, is roughly around 20 times price to earnings, which is favorable, but that's penciling in, showing the share prices showing the lower growth reported by these companies. So watch out for these car makers, as well as, Mahindra being the most interesting one because of the high sales growth led by launches in this particular year.